Hello everyone, my name is Poonam Harjani. I am the project leader of Taxmann's online advisory and research support services. I'm here to present the highlights of Union Budget 2022-23 from an indirect tax standpoint. I'll be covering today's session in two parts. Firstly, I will walk you through the GST proposals, followed by the customs proposals. Let me start sharing my screen now. Talking of GST, one of the important amendments has been with respect to levy of interest on wrong availment and utilization of input tax credit. So far, there has been no specific explicit provision under the law which provides for levy of interest in such cases. With a specific provision coming into force, now the debate as to whether interest is payable in case of wrong availment and utilization of input tax credit, now that gets put to rest. Also, this amendment has been made applicable with retrospective effect from 1st of July 2017. And the rate of interest that's payable in such cases will be 18% per annum. Secondly, in section 16, an additional condition has been included that where credit has been restricted in terms of section 38, that credit will not be allowed to be availed by the recipient of an invoice supply. Section 38 of the CGST Act has been altogether substituted, and clause 2 of it provides for situations in which the auto-generated return will restrict the ITC claims by a recipient in specified circumstances. And these situations cover: one, where the vendor has made supplies within the prescribed initial period of taking registration. Secondly, where the vendor has defaulted in payment of their tax and such default has continued beyond a prescribed period. Third, where there has been a short payment of tax by the vendor beyond the prescribed limit. And fourthly, where there has been excessive claim of input tax credit by the vendor beyond the limit that is prescribed in law. The necessary rules required for making these restrictions applicable will follow. There is also an overarching enabling provision under section 38, which allows the central government to also additionally prescribe restriction on receiving supplies from such classes of persons as the government wants to specify. Moving on, there has been a restriction introduced on in fact, there is a liability to reverse input tax credit, or if the output tax on such a supply has not been paid by the vendor. In such a case, the input tax credit needs to be reversed along with interest of 18%. And once the tax has been discharged on output tax, liability has been discharged by the vendor, such input tax credit on such a supply can be reclaimed by the recipient of the invoice supply. Let's look at some other procedural amendments with respect to input tax credit claims. The timeline for availing input tax credit based on an invoice has been extended to 30th of November. Now it's a specific date defined as opposed to that timeline being tagged to due date of filing of return for the month of September. So earlier what was happening is that each time there was a delay in an extension in timeline by the government for due date of filing of returns. Correspondingly, it was also allowing the taxpayer to avail credit on invoices by such extended timeline. Now, with a date specifically provided under the statute, credit based on an invoice cannot be availed beyond 30th of November of the subsequent financial year. Sections 42, 43, and 43A provided for a framework through which the input tax credit of a recipient had to be matched with the outward liability of the supplier. That whole framework has now been dropped from the CGST Act itself. In any case, that framework had never come into force. However, with these provisions being omitted from the Act itself, it becomes clear that the government no longer intends to implement a two-way matching of the input tax credits with outward liability on the GSTN itself. The consequential impact of this is that the provisional availment of ITC is no longer a concept that's relevant, and whatever are the credits reflected in the auto-generated returns will be the final credit that will be available to the recipient of the inward supply. Moving on, let's look at some other extensions in timelines provided under the budget proposals. The reporting of details of credit notes issued by a taxpayer and for rectification of any or amendments in details of outward supplies or monthly returns or TCS returns can now be reported only by the 30th November of the subsequent financial year, or the date of filing of annual return, whichever is earlier. The provisions with respect to cancellation of registrations have also undergone two important changes. One, for the composition dealers, their cancellation registration can get cancelled if they default in filing their return for any tax period for a period beyond 3 months. Earlier, this timeline was a default in filing of tax returns, 3 consecutive tax returns. For other taxpayers, earlier the provisions allowed the department to cancel the registration if there is a default in filing of a return beyond 6 months. Now that timeline has been dropped from the statutory provision and rule-making powers have been conferred to prescribe the relevant time limit to the central government. There are also some changes in the refund provisions. In case of supplies to SEZs, the refunds, the due date for filing of refund claims has to be computed from the due date of filing of returns for the particular month in which the supply has been made to the unit. For the UIN holding entities, the time limit of making refund claims has been extended from 6 months to 2 years. So the UN entities, the embassies, consulates, etc., who were so far required to make their refund claims within 6 months can now claim their refunds up for a period up to 2 years. The rules also, the section 54 empowers the authorities to withhold refunds in case there are non-compliances or there are any pending demands. However, these restrictions were applicable only in case of zero-rated supply-related refunds and in case of refunds related to inward duty structures. Now, there has been an extension in these powers to withhold refunds to all types of refund cases. There are some restrictions that have been imposed under the statutory provisions themselves with respect to filing of returns. Now, the outward supply return, if it is not filed for a previous month, the outward supply for the current month cannot be filed. Also, if I have missed on filing the outward supply return, I cannot file my monthly return to discharge my output liability. There's an important welcome amendment with respect to transfer of balance of any amount that is there in the electronic cash ledger of a taxpayer. This amount may relate to tax, interest, penalty, or fee, which can now be utilized for payment of the central integrated or union territory GST or a cess of within the same registration, or it could be transferred for payment of the central GST or IGST of another branch or another registration of the same legal entity. So these were the important GST related amendments. Now we move on to look at the customs related proposals. One of the most important amendments in the customs law relate to defining the powers and functions of customs officers. These amendments can be looked at from two perspectives. One, the proceedings that are currently underway or have been underway so far, and the future proceedings to be undertaken by the customs officer. However, before we get into details of looking at what happens for the future and what will happen for the past proceedings, let us walk through all the amendments that have been notified. To begin with, the definition of proper officer under section 234 has been amended to mean an officer who's been assigned functions by board, principal commissioner or commissioner under section 5. Section 5 has now undergone several amendments, which we will also look through in the subsequent slides. In section 3, there has been a list notified mentioned, which includes all or different classes of officers of customs. And that list specifically includes the officers of DRI, audit, and preventive wing. Moving on to the amendments that have been introduced in section 5. The board is authorized to assign any functions to an officer of customs that as they may deem fit. The principal commissioner or commissioner can also assign the functions that have been assigned on to them to another officer of customs. The criteria based on which the assignment of functions will happen to customs officer has been laid out through a specific provision under section 5(4) of the Customs Act. Another important aspect is that the board is now authorized to bestow concurrent powers and functions to more than one officer of customs, and that those powers can be conferred by issuing a notification in this regard. There is a new provision inserted under the Customs Act, which says that once an import transaction has already been assessed and it is subject to an inquiry or investigation or audit proceeding that has been conducted by another officer, and consequent to such investigation or the proceedings, there is some demand that is found as payable. In such cases, the custom officer who has conducted the proceedings will transfer back the documents to the proper officer along with his written report. The follow-up proceedings for recovery of the demand will be carried by the original proper officer. Now, there are two aspects of this whole gamut of amendments. Firstly, the government intends that going forward, the importers do not have to be subject to investigations and recovery proceedings from multiple officers. To that extent, the law has been adequately amended to ensure that once any investigation gets completed, the follow-up recovery proceedings will get initiated and pursued by the original officer himself. In case the recovery relates to multiple jurisdictions, then the board comes into picture and they would notify the relevant proper officer in such cases. So for sure on one hand, the government intends to ensure that the importers are not subject to recovery proceedings from multiple jurisdictions going forward. However, for the past, there is a specific validation provision given under the Finance Act, as per which the actions that have been taken so far by the customs officers have been given a legal sanctity. With this provision coming into place, the Supreme Court ruling in case of Canon India stands overridden. The ruling in that case specifically said that once an import transaction has been assessed, the DRI agencies cannot issue a show cause notice for recovery of any demand since they are not the proper officers. Now, since the actions that have been already taken have been said to be valid actions under the finance bill, all the proceedings that were being put on hold and the notices that were being quashed on jurisdictional grounds can now be reinitiated by the investigation authorities that were pursuing the investigation proceedings. Moving on to some other amendments. Additional rulemaking powers have been conferred upon the central government to impose additional obligations on importers or additional checks to be exercised. This is basically an anti-abuse provision to ensure that the importers have done proper valuation of goods. Now, what these additional obligations and additional checks are going to look like will become clear when the rules are notified for this. Let's look at some of the amendments with respect to advanced ruling procedures. So far, the statute itself says that a fee of 10,000 rupees will apply in case of filing of an advanced ruling application by an applicant. This fee has been removed from the statutory provision, and the central government has now been empowered to frame rules to prescribe such fee. So the rules in this regard need to follow. Another important amendment is that the applicant of an advanced ruling application can now withdraw their application anytime before the advanced ruling order is passed. So far, the applicant could have withdrawn their application only within 30 days of filing the application. Another interesting and an absolutely unprecedented amendment in law relates to the validity period of an advanced ruling order. The budget proposes that an advanced ruling order will be valid for a period of 3 years from the date of passing of such order, or change in law or change in fact that have an impact on such advanced ruling order any of these, earliest of any of these events. Now, this is a welcome provision in a way that in case there is another attempt that the importer wants to make with respect to getting clarity on the tax position, they will, after a period of 3 years, they'll be free to do that. The period of 3 years in case of pre-existing advance ruling orders will be counted from the date of the enactment of the finance bill. Another important amendment relates to publication of import and export information, whereby this kind of an act has been considered as a non-cognizable punishable offense. So if somebody publishes valuation, classification, quantity related data of goods imported into or exported from India, or publishes details of exports or exporters or importers, such an act is considered as a punishable offense, which can invite imprisonment up to 6 months or a fine up to 50,000 rupees or both. However, such an act will not be considered as an offense in case such a publication has been done as required by law, or when it is made on behalf of the central government. One last interesting clarification relates to the social welfare surcharge. There has been an ambiguity whether the social welfare surcharge will be applicable in case the aggregate of customs duty works out to 0. The CBIC circular issued actually clarifies that no social welfare surcharge will be payable in case the aggregate of custom duties on which the social welfare surcharge is to be computed works out as nil. So these were some of the highlights of the budget 2022-23. Thank you very much for being with us, and also do watch out for our budget marathon event on Friday, 4th of February at 1 p.m. Look forward to seeing you all. Thank you.